This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Monday, December 15th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area. We'll be sure to get to it during the show. Overnight markets here at March corn down a half at 440 1/4. January soybeans were up a half at 1077 1/4. And March Chicago wheat was down 3 3/4 at 525 1/2. This morning we had a couple of export sales announcements. 150,320 metric tons of corn was sold to unknown for 25. Also announced 136,000 metric tons of soybeans to China, also for 25. We had a export sales report out. This is for the week ending 11/20, and it was pretty solid. Corn was 1,843,200. That was the upper end of the range for that week. Also, soybeans, real big sales, 2,320,700. Upper end of the range was looking for 1.4 million, so well above the upper end of the range there. On the wheat side, 361,700. That was disappointing towards the bottom end of the range. Meal, 151,000 was in line, and oil, 7,500, which was at the lower end of the range. Later this morning, 11 o'clock Central, we're going to get a NOPA report, crush report, estimates looking for 220.285 million bushels. Closing out last week, they did announce that biofuel guidance would be delayed until next year, which I think disappointed some folks. But also, on the flip side, I think they're, hopefully they're just going to try to get this thing right. We got good weather over most of South America right now. So with that, we'll kick it off. Dustin, maybe a few thoughts here as we start the week. I know we're grinding into holiday markets, but give us some insight there, and then we'll throw around the room.
Yeah, I think, when you talk about biofuel guidance, oil share has been doing okay. We're at like a 45%. And, crush margins out to July are still $1.50. But I do think that there's still just a lot of wind out of the sails right now with the idea that, the rumors from that Reuters story that they may be allowing used cooking oil from China to still qualify for the credits. I think we need strong domestic biofuel policy to support our prices. It's going to be hard to get bull markets by convincing China they have to buy from us first. That's just one thing. I think that's the wind out of a lot of people's sails right now.
Justin, pretty interesting. I know we've talked about history lessons here lately, but you get the funds almost a record long, and you get enormous weekly sales, and you make highs. So pretty much textbook there on the bean side.
Yeah, we're talking before the show, but Beans has done a really good job of making anybody with a strong conviction look pretty silly. The perma bears, got run in. Funds flipped to near record long. We did some sales, so they look pretty stupid at one point, and now the perma bulls fighting it the whole way down look pretty silly too. So I think, to me, the bean market made a ton of sense. Again, it's a history lesson, but you got guys short, they're getting frustrated. Technicals turned up. We turned off the data flow. So they flipped and got way longer than we probably realized. And then I think we said it when we were making the highs, just like, once they announced that they were going to slow release the data, it just became like, not to be a conspiracy guy, but they're going to tell us this all after the fact. And that's what's happening. Mm-hmm. The question now is, now what, right? Weather looks pretty good. And at the same time, when you're making highs, you also, the weather didn't look so great for South America. Since it's gotten a little bit better. So a lot of things have happened. I think beans are probably just coming back down to maybe a fair value. Personally, I don't know that we have to go make new lows or anything like that. I think we're probably back into, like I said, fair value. And I think now it's all about what South America weather looks like. To Dustin's point, we need biofuels. We need strong domestic policy, and we've talked about it a ton of times on the show. This forced China purchasing is not a fix at all. It could feel good at the short run or whatever, but we have to really figure out a longer term demand base here. So, and you see it. I mean, you're going to get 220 some million bushel crush. Like, crush has been on fire. We should try to push that to 300, over the next several years. I mean, we should try to use as much as we can here.
Dustin, what were you going to add?
Just, funds bought 1 billion bushels in about a month's time. And so and we don't even know where they are. Maybe they've sold 1 billion bushels by now. We have no idea. That was a pretty crazy thing. And to Justin's point, we saw it after we've already broken off the highs is when we figured this out. So I'm just a little flabbergasted that happened, and surprised that it didn't move it even more than it did. I mean, that's a lot of contracts to buy. So
yeah, the last time they were that long, we were at $15, $16 beans.
Man.
Right. So we obviously had the supply to sell to them. Right. So it massive change of ownership. We know a lot of farmers sold off the combine because that's been the MO lately with last several years. And we probably ran into a huge South America hedging. So the world supply of beans is huge, no matter how you slice it. I mean, we had a lot less acres here this year, so we could run into some tightness if we, force China to buy more or whatever. But at the end of the day, the world supply and demand scenario for beans is not tight. It's more so in corn. Corn's got a better balance sheet globally. Beans is, I think, completely dependent on South America having a problem. I don't know if you guys agree, but I don't see a scenario where China's going to buy, all of a sudden their demand curve is going to shift because of any trade deals we do. So it's just a matter of, if they artificially have to pay more for our beans to lower tariffs for all the other manufacturing that they do, so be it. But I don't think that makes a bull story.
Yeah, and you're bringing yourself into future administration policy, right? I mean, that could flip on a dime. I wouldn't want to put all my chips on, betting on that by any means.
No, I mean, the best, like I said, the best case scenario is we figure out a biofuel policy here. Yeah. I'm curious what you guys do think. I was thinking about it over the weekend, though. Curious what you guys do think on acres for next year. Because I've been a natural, 4 million acre switch back to soybean just because of, how high corn acres are this year. But if the attitude doesn't change to more friendly soybeans, maybe we don't see as big of a switch with kind of how yields, corn yields kind of hang in there. I feel like there's maybe more of a shift back to more corn on corn. I guess I'm kind of feeling that a little bit. I know it's a little early, but I don't know what you guys think.
I think everybody's preaching that the economics, and we know that sometimes the economics don't sway that opinion, but the economics right now are saying that, corn's going to get planted unless beans do something crazy, right? Because you're still more profitability on the corn side.
We go back last year, though. I mean, maybe one unintended consequence of raising the subsidy on ECO to 65%. We had a 5-fold increase on the ECO acres last year. Did that not shift maybe 10% of that number to corn just because the insurability of that was so high? And now we are talking about
80%.
80% subsidy. Yeah, it's gonna. Yeah. I mean, we will know after a couple of years what increased subsidies do, if that does make it a shift to acreage. But I wouldn't be surprised if that's not having an impact.
Yeah. Yeah, I mean I think the big question will be, the big increase in acres the northwestern areas that we saw. if that shifts back to beans or not. I think Illinois, Indiana, Iowa, like the big corn states, I think probably will stay heavier corn with these changes, but I don't know what it, the economics of it, call it the Dakotas, those kinds of areas, if they shift back to beans. Now, the biggest problem is, the basis has been so weak out there because the business goes to P&W, which is China business. So that's probably a big factor on those acres, I would think. Just the attitude, right? If you're getting $1.50 under basis for beans versus if you have a good export market, probably dictates that shift in acres, I would think.
That'd be interesting too. Folks that are watching today and that watch religiously, love to get your feedback on that. Feel free to comment and let us know kind of where your head's at, because we're running the numbers and punching it in and stuff, but like to see where your head's at, where your mentality's at.
I'll tell you what, I get more the question of what do acres look like from our customers versus them telling us what their acres are going to be. Hey, what are you hearing from guys? And they're like, I'm hearing this question from all of them. So I think everybody's got this, thinking the same thing. Don't know where.
A lot of a lot of it is just attitude going into it. Meaning like, hey, we're not going to, like last year, we're not going to sell beans because we're in a trade war with China. So I'm going to plant more corn. A lot of it is guessing what the price of the commodity is going to do. Mm-hmm. Sometimes it's obvious when you have like a soybean corn ratio that goes super high, where it's just obvious, right now we're at like a kind of historical average, corn bean ratio. So it's not a no-brainer price-wise. I don't know if it's more of an attitude-wise what happens, or maybe to Dustin's point, you can just get so many more dollars covered, via ECO at an 80% subsidy, that you just feel like you feel safer planting corn, which is kind of my take now on, at least on the I states. Just the gross revenue dollars that you can protect for relatively cheap. I feel like guys feel like they can grow 250 bushel corn easier than, beans. They feel like it could be 60 or 80 or, don't feel as confident.
Yeah. And they like harvesting it better too.
Yeah. I don't know. I go back to like the dollars that it takes to grow beans is so much less, it's less bushels to handle, you can store more, all those things. But at the end of the day, people like to grow corn. So,
yeah, it's interesting. We got somebody that just wrote in and got seed pre-ordered for 100% corn and 100% beans.
Smart man.
My kind of guy.
Yeah. Yeah.
Go for it. Yep. Ben, what do you got for us, Ben?
Well, I think there's still a lot to be written on planning, and I think that there's really good observations on what insurable dollars are, but we still have to get through that January report. And, everyone is focused on the potential for a yield reduction in corn. You don't hear people talking about it all that much in soybeans. And domestically, we could be very tight in beans, in the maybe end of the first quarter, into the end of the second quarter sometime. And if we can get that on paper, the U.S. looks to be pipeline-ish in beans, say with a bushel reduction. And I really think that the optimal situation, and of course in commodities, rarely do you see the optimal situation, is beans have to make corn work a little bit. And I think that number's, 1150 plus, where you have to really start looking at beans a little bit more on new crop. So I really think that finding out if there is a yield reduction in corn and particularly in beans is going to have a lot to do with where we head. And we're still coming off of 2 years of record crops in both hemispheres, and corn is still globally tight. So
I know we're getting off the subject a little bit here, but I do think it feels like we're going through a cycle of QE again, both in the US and in China. So I think that could be a bigger factor out forward for just our prices. So the one thing is we could just be relatively cheap to, all other asset classes. So that, I do think that you could see money in 2026 going more into our products. So, we're kind of talking both sides of the market here, but I think, fundamentally, you probably need, a South American problem to have a real bull story, but just, macro, maybe we're just cheaply priced in general.
Very good. We just just coming into the open here, Ryland. Real quick, we'll start the week on livestock. We had a stronger week last week. Hog slaughter and production totals were the largest of the season, though, which was good to see. So, what are your thoughts here as we start the week?
Yeah, it just looked like we kind of ran into some resistance. We're creeping up on that 100-day moving average. It's been a really strong move in cash, strong move in futures, and so now we're just seeing a little bit of apprehension, I think, towards the end of last week. I mean, cash was up $6 to $8 on the live side, so we're seeing 227 to 230. So I think there's still going to be quite a bit of optimism. Just kind of cautious, I would say, especially with temperatures starting to moderate this week. Also, news over the weekend that JBS was going to close a slaughter plant in California and Riverside permanently. Just kind of goes to show the state of the industry. I think anytime we start seeing packer margins really start to slip here, we're going to start to see these kind of closures and consolidation. So kind of surprised the market didn't react to it, maybe just because the timeline sees that closure on February 2nd. So we'll see if that does become an issue overall. I mean, like I said, it just feels like you've kind of got these rampant production schedules. You've been killing like crazy, and sure enough, now it just feels like we're kind of stalling out a little bit, just because packer margins are hitting the red. So we will have a cattle on feed report on Friday. So I think that's something that's also going to be a factor as well. So it just kind of feels like you're going to have a little bit of push and pull to kind of start at the beginning of this week. And then on the hog side of things, climbing back to the 100-day, like we said, we're seeing probably some managed money probably coming in here. And just like we talked about, it's a good time to start to look to forward margins. I mean, got June, July back up into $1 territory. It's hard not to respond to that so soon. I think generally there's a lot of optimism just between now and the springtime. And the market's already baked a lot of that in right now. So it feels like we're just kind of waiting to see that the fundamentals are actually going to follow suit. And we saw cash at 71, 28, still down 41. But carcass was holding up okay. Ham market kind of slipped a little bit, but the bellies look to stabilize. So we'll see if anything like that changes. Otherwise, it just kind of feels like, probably running into some producer hedging now.
Very good. Appreciate the update there, Rye. We just came into the open. We got March corn down 2 now at 438 3/4. January soybeans are down 4, 1072.5 is the last, and March Chicago wheat is down 3.5 at 525 3/4. Again, Notebook Crush will be out at 11 o'clock Central. We'll take a look at that. Visit about that tomorrow morning's War Room. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a good start to the week, and we'll talk to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.